Okay, guys, this summer trading's brutal. It's tough to find entries sometimes, but we did have a nice highlight here from PAY. There aren't that many calls going on right now because the market pretty dead. But PAY, if you recall, looked like this last night when I put out the list. A couple big down days in a row. Had support to the left here, watching for a long this morning as a bounce play. Okay, now typically a bounce play is played if you have a narrow range and then a break of the early high, the 30-minute high. Technically, even though today it had over like a dollar range from its low to its high, when it broke its early high, technically it had a narrow range, and I'll show you what I mean. A couple days ago, there was the high and there was the low. Okay, so look at the distance between these lines. Yesterday, there was the high and the low was right here, from over here. See the distance? See the distance? And then this morning, there was the early range. Okay, so relatively speaking, compared to the two previous days, nice narrow range, break of the early high right about here, and it's off to the races. Okay, matter of fact, I'll scroll over. Look at that move there. However, I'll show you how I called it without having to wait for the high of day break. Okay, when it took out yesterday's low right here. Okay, here's yesterday's low. And this morning, about 10 minutes in, it takes out yesterday's low. People shorting as it takes out yesterday's low after those two big down days I just showed you. To me, they're trading wrong. They're thinking wrong. That's the same as going long a stock that's been up huge 2 days in a row, and then on the third day, when it breaks the yesterday's high, going long. That's chasing, okay? Setting yourself up for a reversal. All right, and that's what happened here with Pay. Now, I didn't want to just jump in anywhere down here, but when it came back up to the 20-period moving average on 5-minute candles and then kind of based sideways for a little bit, this is an area where sellers should come in and probably push it back to the low of the day. And I noticed that they weren't having much luck pushing this down. So I switched to twos in that area right around 35.35. Let's scroll over here. Okay. This is that same area I just showed you. Sellers were coming in. They weren't having any luck at all. 2 minutes later, it's right back up. So I gave a verbal idea over the microphone, over this base, 35.37. I said could get you to the high of the day, and then that would be the potential breakout area. But a much better risk reward by jumping in at 35.37, and stop goes below this candle, 35.18. 19 cents risk, and there's the trigger, and it's off to the races. 35.37, it goes to 36.88. $1.51 in our favor, 19 cents risk, never even came close to stopping out. So that's how you play a bounce play, and Pay was pretty nice to us, giving us a way in without having to take the high of day break. If you did take the high of day break, you still were never underwater, right? You took it, now your stop would have been a little wider, but we found a way in earlier down in this area. But if you took the high of day break, it just shows you the power of a bounce play, something that's been decimated for a couple days. So Pay, any way you slice it, was a good trade today. Nothing really else to talk about. Had a couple good ideas of stocks that came into buy zones, but nothing really blew it out of the park. So Pay is definitely the highlight of the day, and pretty important to find some trades early and have a decent watch list to start with, because oftentimes in this environment, the SPY, let's go to 5-minute candles here, the SPY just stays in an extremely narrow range and grinds all over the place, and no discernible setups, especially in the afternoon in the summer. So pretty important to find some trades in the first couple hours, and then then you can relax for the afternoon. All right, have a good night. We'll talk to you later.